Hey, you guys, as I get closer to retirement, I start looking at different states. Now, we've already picked our state, but I thought a lot of people would benefit from looking at what states are most tax friendly to retire in. Now, there's a whole host of reasons that different states are there, but this particular article that I found talks about the states that do not tax pension income or Social Security income. So it says the most tax-friendly states to retire. Reduce your retirement tax bills. Retirees can help their savings last longer by moving to a place with lower taxes. These states don't tax Social Security or pension income. However, they have very different property and sales tax rates, which should also be taken into consideration, according to the data provided by the Census Bureau. So let's take a look at what states we have. Number 1, Alabama. The state of Alabama does not tax Social Security benefits. Traditional pension payments are also excluded from taxable state income, including private defined benefit plan payments and retirement income for teachers, law enforcement, firefighters, and government and military employees. Property taxes are also low. The median property tax in Alabama is $609 annually, and it has one of the lowest sales tax rates at 4%. All right, next up is Alaska. Alaska is America's northernmost and largest state by area, has a different tax structure than any other state. It's the only state with no state income tax and no state sales tax. However, the state does need revenue to provide services and chooses to collect those funds in the form of very high property taxes. The median property tax in Alaska is $3,325. Citizens of Alaska also receive a unique financial perk in that residents who have lived in the state at least a year get an annual payout from the Oil Wealth Trust. Last year that was $1,114. All right, next up, Florida. Now, most people know about Florida being pretty and sunny and a place where lots of old people go to retire. But that's not the only perk. The state doesn't levy any income tax, which means that you get to keep more of your earnings if you do choose to work. It also doesn't, obviously no taxes on Social Security or pension income. The real estate taxes are not terrible, at a median of about $2,035 a year, and the state sales tax rate is 6%. Next up, Illinois. The state of Illinois, which I think of as a high-tax state, but remember the parameters. It exempts many types of retirement income. Retired residents are allowed to subtract their Social Security and pension income from their federal adjusted gross income, including income from employee-defined benefit plans, IRAs, SEPs, and government retirement income, or military retirement. However, retirees may still be taxed in other ways. Real estate taxes are high, at about a median of $4,527 a year, and they have about 6% sales tax. Next up, Mississippi. Many types of retirement income aren't subject to Mississippi's state income tax. Pension and Social Security benefits are allowed to be subtracted or excluded from state taxable income, including public and private pensions and withdrawals from 401ks or IRAs or 401k plans. Mississippi's property taxes are also generally low, with the median of just $1,009. But they do have relatively high sales tax rate of 7%. Nevada. Well, when we think of Nevada, we think casinos and the nightlife. But it also has some relatively low tax rates. Nevada does not have a state income tax, so you don't have to worry about paying tax on any of that income, Social Security, pension, whatever. Property taxes are generally low, the median of about $1,695. It does have a high sales tax rate of 6.85%. So you guys remember, it's not just whether they tax it, it's all the taxes. Next one up is New Hampshire. Residents of New Hampshire don't have to pay income tax on Social Security, pensions, distributions for retirement accounts, or income earned from a retirement job. The only forms of income in New Hampshire that taxed are dividends and interest. There's also no state sales tax. so retirees can shop freely without any extra tax burden. However, it does have among the highest property taxes in the country, where a median is about $5,768 per year. Okay, next up is Pennsylvania. Social Security benefits are not included in your taxable income in the state of Pennsylvania. Distributions from 401ks and similar workplace retirement accounts or IRA withdrawals taken after 59 and a half are also generally exempt from state income tax. But retirees will have to pay a 6% sales tax on their purchase, and the median property tax bill is around $2,887. So not terrible on the property taxes there. Next up, South Dakota. This is another state that doesn't have a state income tax. Retirees don't need to pay state tax on Social Security, pension, retirement withdrawals, or earned income from a part-time job. However, property sales taxes are median of about $2,256, so not terrible. And it does have a low sales tax of about 4.5%. Next up is Tennessee. The state of Tennessee doesn't tax Social Security or pension income or earnings from a job. Only dividends and interest are taxed in Tennessee. And taxpayers over 65 with low incomes are exempt from that as well. Property taxes are also low, with a median of about $1,220. But they do have a pretty high sales tax rate of 7%. Next up is Texas. Now, everybody knows Texas has no state income tax, which everybody thinks makes it really great because obviously no Social Security, pension, 401k, all that's tax-free. But where Texas does pick it up is they have significant property taxes, you guys. The median's about $3,390, depending on the area of Texas you live in. There's also a 6.25% sales tax. Next up is Washington. Now, Washington does not have a state income tax. So Social Security, retirement distributions, pensions, all that, you don't have to worry about paying a state income tax bill. However, they have pretty high sales tax, and the median homeowner is paying about $3,601 for property taxes. They have a 6.5% sales tax, and on top of that, you have a lot of local sales tax. So Washington gets you when you buy things. Wyoming. Wyoming doesn't levy any income tax, so there's no state tax bill for retirement income or Social Security or pensions and IRAs. The state sales tax is relatively low at 4%, and you won't pay a very high property tax either. The median is about $1,352, so a low-cost place to live. So again, the states that do not tax your pension or Social Security are Alabama, Alaska, Florida, Illinois, Mississippi, Nevada, New Hampshire, Pennsylvania, South Dakota, Tennessee, Texas, Washington, and Wyoming. But remember, even though they don't tax Social Security or pension benefits, they can get you with high taxes in other ways. So you guys, as you're picking where you're going to end up for retirement, I think taking taxes into consideration as a global picture, as well as where you feel comfortable to retire, is an important way to make sure your retirement is enjoyable and that you don't run out of money. Hope you guys got something out of this. If you did, do me a favor. Drop me that like. Really helps the algorithm. If you're new, hit the red button, ring the bell. All right, we'll see you. Thanks.